Most buyers, they walk into the home buying process completely blind, and what they don't know costs them their dream home and money and their peace of mind. So buying a home is emotionally draining. It's not a shopping spree. And if you miss even one critical step, you could lose everything you worked for. In today's video, I'm going to expose the real steps smart buyers take. The steps most agents either don't know or they won't tell you, because your future home will be one of your largest assets in your financial portfolio. This is way too important to leave to chance. And if you skip even one of these steps, relying on bad advice, online myths, or lazy shortcuts could end up overpaying by tens of thousands, losing out again and again in multiple offer battles, or even ending up with a home that you regret, or house poor, or money pit. Now, this information is only for serious buyers. I have put together the links to 3 guides that I give to my clients that you must read, like right after this video. Now, you won't see a realtor give this information out to their clients ever, so let's get to it. You have to be financially prepared to make an offer. Before you even think about scrolling through listings or visiting open houses, you need to get your financial house in order. This is the foundation that everything else builds upon, okay? So under this umbrella called financial, let's talk about credit score first, all right? Most people know, I need a good credit score, but what does that mean? What does good mean? Well, you can technically get approved with scores as low as 580 for FHA loans or 620 for conventional loans. The reality is that the best rates and terms typically go to those with scores above 740. Now, what many lenders won't tell you up front is that there's a substantial difference in the interest rate you'll receive with a 700 score versus a 760 score, for example. We're talking potentially a 0.5% or 0.75% difference in your rate, which translates to tens of thousands of dollars over the life of the loan. And if your score isn't where you want it to be, just consider waiting a few months. What can you do in those few months? Well, you can pay down credit card balances to below 30% of your limits, okay? You can also dispute. Maybe there's an error on your credit report, because about 20% of reports, believe it or not, they contain errors. And you can avoid applying for any new credit of any kind when you're going through this process, okay? Or lastly, you can ask for a goodwill adjustment. Like, for example, any late payments, you can write a letter, call them saying, listen, I've been good now. I may have been bad, late 8 months ago. Can you help me out here? Okay, that's the credit score. Now, the down payment truth is that you probably heard that 20% down is the standard. That's not quite the full story, because while, 20% down helps you avoid the PMI or private mortgage insurance, but there are many other options with lower down payments. I'm not saying that in such a seller's market that any of these programs will fly, because they won't, but in a buyer's market, they will. For example, we have the FHA loans, which you've probably heard about, that require 3.5% down. There's also conventional loans that can go as low as 3% down for first-time buyers. There's all kinds of grants out there right now giving free money towards down payment and closing costs. And then you have the VA loans, 0 down, that's for the veterans. USDA loans, they provide 0 down for rural properties. They have physician loans that are 0 down, and they have nurse practitioner loans. There's so many different loans out there. Okay, well, tell me something, Diane, that I don't know. Well, here's what they don't tell you. PMI, private mortgage insurance, isn't always the enemy here. Sometimes it makes more financial sense to buy now with a smaller down payment if you can get your offer through in the seller's market, and pay private mortgage insurance, PMI, temporarily rather than waiting years to save 20%, especially in appreciating markets. However, be aware that your down payment affects more than just PMI. It impacts your interest rate, usually lower with larger down payments, Why? Less risk for the bank, right? Easier to sell off your loan. Your offer strength in competitive markets is not strong when you don't put a lot of money down. If it's competitive, seller's market. And your monthly payment, for example, for every $1,000 you do put down, your payment will only go down about $6.50 to $7, around, like, if the rates are 6.5% to 7%. That's not a lot, but that's the reality. And then your cash reserves. You won't have a whole lot of cash reserves after closing if you put it all down to purchase the house, right? And speaking of cash reserves, this is important. Lenders typically want to see that you have at least 2 to 3 months of mortgage payments left in the bank after closing. This is basically a requirement that many first-time buyers don't know about until they're really deep into the process. So if you want to get a loan and you want it to be looked at by the seller's agent and the seller, you have to learn a few of these pre-approval secrets. One, just start a folder, call it pre-approval in your Google Docs or something. Get everything in there that you need, because it's essential to have a full pre-approval, not just a pre-qualification, because all pre-approvals are not created equal. A really real pre-approval involves a true verification of income and assets. They're verified. They do a hard credit pull. They're reviewed by an actual underwriter. Many online lenders will give you a pre-qualification that's essentially worthless. It's based solely on the information you provide without any verification, and sellers and their agents can spot the difference, and a weak pre-approval can sink your offer. It happens all the time. I'm a listing agent. I want to know if you're fully approved. So what you really want, I call it an underwriter reviewed pre-approval or verified pre-approval. This means an actual underwriter has reviewed your documentation, signed off on everything except for the property details, because they don't know what property it is, right? And also be prepared for lenders to request seemingly ridiculous documentation. They might also ask you to explain small deposits in your account, or request a letter explaining a job change from 3 years ago. It's not personal, it's just due to strict regulations that were implemented after the 2008 housing crisis. And sometimes, most of the time, they lose paperwork. So make sure you start that folder, throw everything up there, and you can upload it to their portal, have it all ready for them. And then beware of some hidden costs that nobody really mentions. Because beyond the down payment and closing costs, you have to prepare for, I call them overlooked expenses. Moving costs, $1,000 to $5,000, depending upon the distance and the amount of belongings. You could be out that kind of money just from moving. Or maybe there's some immediate repairs that need to be done to the house, and you really discover them during the final walkthrough or your first 3 weeks into the house. You'll see, oh my God, there's more things than I thought here. How about new furniture and appliances? I know that most of my first-time buyers especially underestimate appliances. How about utility costs? There will be more, right, if you're moving from an apartment to a house, so make sure you get that list, a complete list. I would call it like a monthly list from the last year for the homeowner to give you the utility costs. Break it down by month. I can give you an idea of what months, how it fluctuates. I know February is usually the worst month for PICO, which is our electric and gas. How about if it's a homeowners association? You like a house and you want to buy it, but all of a sudden you find out you have to pay another $1,000 or $500 a month. That's a lot of money. And how about property taxes? Many areas they reassess after the sale and it increases your taxes. That's more around our area for new construction, but you have to make sure you have the money budgeted for that. And of course, home maintenance. You have to budget at least 1 to 3% of your home's value annually. Very important, because things are going to happen. And even if you don't spend it that month, that year, just say it's $15,000, put it away. You're going to need it down the road. Have a house savings fund. Okay, now I want to talk about debt to income ratio reality, because they call it DTI, but your debt to income ratio is critical, but the guidelines aren't as straightforward as you might think. Lenders may say they'll approve you up to 43% of your debt to income ratio, meaning that all your monthly debt payments, including the new mortgage, can't exceed 43% of your gross monthly income. But in reality, the best rates will go to people under 36%. DTI. If you're at the upper limits of your DTI, you need to be stronger in other areas. And I know some of the loan programs have compensating factors that allow higher DTI, but how that's going to affect your rate. And then you have these self-employed borrowers facing a more stringent DTI. It's because that's, it is a self-employed, right? So one key factor here is that just because you're approved for a certain amount doesn't mean you should borrow that much. A good rule of thumb is to keep your total housing payment, mortgage, taxes, insurance, HOA, if there is one, under 28% of your gross monthly income. And today, this number is now at 36%. People are spending so much more on this part of their housing, than ever before. So now the next step. Let's go for looking for a home. You got the pre-approval, you got the full underwriter thing, let's go for it. And I can tell you, do not go through this home hunting process if you don't have the time to do it, okay? Because it's a new job. So next step is house hunting. You're out there and you're going to make an offer. You're ready to make an offer. And house hunting, guess what? It starts with finding the right realtor. Let's be honest. Not all real estate agents are created equal. I've provided below one of the links in the guides is the questions to ask a realtor before hiring them. You can download it. There's some great questions here. So for example, making sure that the most important thing to that realtor is what's important to you about buying a home. That they understand your specific needs and your constraints. Very, very important. Make sure they're experienced in specific target neighborhoods. They know your price point, because if you're with a luxury agent, they might not give attention to lower priced homes. So making sure that's there. And a communication style. Make sure it's one that matches yours. And you feel like that person understands you. Make sure they're willing to show you properties quickly, especially in a competitive market, and they have a team of people to do that. And also, you want to know who is doing the negotiating and who's writing up the contract, who's going to be that usually the team leader, like someone like myself, does all that work. And you want to make sure you interview at least 2 agents before choosing one. And how you do that is you get on the phone and ask these questions I provided for you, and then pick 2 for a Zoom interview. Now, an experienced agent like myself, they're going to have their list of questions to ask you, because they don't want to spend an hour on a Zoom call if you're not a committed buyer. And they're going to suggest to have this Zoom call. So you know you're with an experienced agent if they're going to do. I don't care if you live down the street, we're doing a Zoom call. Because if you live down the street, I would be meeting you at my office. It was before Zoom, okay? So make sure they want to sit down with you. This is unacceptable to bypass this step. Because during this process, you're going to sit with them, they're going to understand your needs, they're going to give you a budget worksheet, you're going to go through your whole budget, they're going to start showing homes on the computer, see how you feel about them, they're going to show you all the costs to buy a house. We're going to go through all that stuff with you, okay? That's really important to have that sit down. Don't just go out looking for homes, find a buyer agent to show it to you, and they're really nice. Nice doesn't count in when you're dealing with one of your biggest financial assets you're going to buy. And remember, the listing agent represents the seller, not you. Their fiduciary duty is to get the highest price and the best terms for the seller. So always have your own representation. And in your contract with the buyer agent, it will say that you will pay their fee. However, it usually is wrapped into the listing price of the home. So now you've done your Zoom call and communication. The agent should have some way of communicating to the team. We have the WhatsApp. It's great because you can go on, type in what houses you want to see, and the team agent who's going to be showing you the property will say, I can show it to you tomorrow at 5 o'clock. Is that good for you? And set it up. Very important to have that communication. So I want to talk about the house hunting reality, because house hunting is exciting. And it's exhausting at the same time. Here's what nobody tells you. You probably might look at 10, 15, 20 homes, who knows how many, before finding the one you want to buy. And then when you want to put an offer in, there's maybe in a seller's market 7 or 8 people who also want to put offers in. So you might put into 3 or 5 offers in on homes before you even win a home and even get one. And you may only get one chance to preview that home before submitting an offer. So that's why, another guide, I provided you a house viewing guide to make sure you do not buy a money pit. It's down below. I'm going to click on it. Wait till the end. I'm going to go through it with you. Because the perfect home, it doesn't exist. You got to prioritize location and structural integrity over cosmetic issues. In a seller's market, you might be giving up something. You always will be giving up something in a seller's market. In a buyer's market, you will have more homes to choose from, a little bit more variety. Other things about house hunting you probably know already, maybe. The photos online, they're very, very misleading. They use these wide-angle lenses to make spaces look bigger, and they don't show you everything. And then if you're thinking about buying new construction, that often has hidden upgrade costs, because you can go into a house and it's, oh, it's so beautiful, and half the stuff that's there is all upgrades, and you're just going to spend another $60,000 just to get into that house. If you see like $399.9, you'll probably end up at $465 to get the home you really want. And then you have open houses. They're typically not where you'll find your home. They're more like networking events for agents to meet other buyers. But if you like a home, I'll really like it a lot, and you see it online, and the open house is Sunday, but it's Wednesday, don't wait till the open house to view the home. It could be gone before that. Realize that. Things are moving fast in a seller's market. In a buyer's market, you have more time. I don't know when we'll get back to a buyer's market. I have no idea. But if you're in a buyer's market right now and you're watching this video, it'll be a little less pressure for you. And what I discuss on my guide is that you want to focus more on just staging and paint colors. You've got HVAC, water pressure, and orientation of the home, where you get natural light or noise levels at different times of the day. Check the cell phone reception throughout the house, things like that. So I'll review the guide with you later. You can always download it. You must read these guides after this video. You must read them. And don't forget to do neighborhood research. A lot of people skip this step before making the offer. Make sure you research overlooked factors such as school district boundaries. They don't always align where you think they do, or future development plans for the area, and crime statistics by time of the day and type of crime. If there's any boarding homes in the area or sex offenders living on your street, you can look that up online. Whether the house is on a flood zone, or if there's any insurance requirements, or if there's any HOA rules and financial stability of the HOA, and internet service providers, and speeds available, and proximity to the airport, flight paths, or train tracks, or major roads that are going to affect the noise in your area. Because a neighborhood might seem peaceful during the day, because a neighborhood that seems peaceful during a Saturday afternoon viewing might be a completely different place during rush hour or late at night. So you want to make sure you got that down. Okay, now it's time to make a winning offer, right? And you found the perfect house. And in competitive markets, the highest offer doesn't always win. You can make your offer stand out many different ways. Just make it, if it's seller's market, clean terms, minimal contingencies, for example, flexible closing timeline that accommodates the seller's needs. Find out what that date they want. A larger earnest money deposit, showing you're serious, or maybe a non-refundable deposit. Making sure you have that pre-approval from who? A reputable lender, not just an online bank. People don't like that. You might want to write a personal letter, but not really accept it anymore in our particular MLS to write these letters. Or you could do an escalation clause that automatically increases your offer to beat other offers. You also can waive certain contingency as well. It carries risk, but you can do that. But you want to be careful about waiving the inspection contingency. Consider doing a pre-offer inspection. Maybe you'll do an inspection or bring your contractor with you to the showing, right? You can waive the appraisal contingency, but you have to make sure you have enough cash so you can cover the gap, right? Maybe your financing contingency could be waived, but only if you're rock solid. Maybe you can submit an offer as cash, by using other people's money. I call it OPM, but then it won't be your cash, but you'll still get a mortgage anyway. I've done that many times. And then there's the property insurance contingency. If you know the property doesn't have any claims on it, you can just remove that contingency. But there are some negotiation tactics that a lot of agents won't share. Professional negotiator like myself kind of know these tactics. If it's in a buyer's market, sometimes silence is powerful. Not responding immediately creates a little pressure. But in a seller's market, your agent needs to be all over that listing agent every day, 3-4 times a day, keeping in communication with them. A lot of times somebody will say, they want to put an offer in, and they call me back 2 days later and the house is sold. They said, why didn't you call me? I'm like, I have 17 other agents calling you. If you were interested, you would be calling me all the time. You can always ask for more than you expect to get. A lot of times that's great in a buyer's market. Also, let the other party name the first number when possible. Find out what their numbers are thinking about. Have the agent talk to the other agent and get a number where they think the house will go. I would say, like, let's see if my buyers will even go to that. What number are you thinking? I want to get them emotionally involved. Try to get the agent to tell you a number that they know will close that deal. And they'll tell you, especially if they're not good negotiators. And I always say use specific numbers, really specific rather than round figures, like 595, 600, something like that. It's always good to do that. You could also pay for the seller's transfer tax. Your realtor can remove their commission, and you could pay them directly. There's lots of other things. And you have to be always willing to walk away, okay? Remember, everything is negotiable, not just the price. But in a buyer's market, I can't wait to get back to a buyer's market, but will we ever do that? I don't know. But you can ask for closing costs to be paid by the seller. You can get a home warranty inclusion. I'm not too a fan of those, but you could ask for that. Repairs completed before closing. You want to ask for some furniture or appliances to be included. Maybe the seller will pay your transfer tax, so you have to come up with less money. But if you're in a seller's market, you've got to be really flexible with the closing. Maybe allow the seller rent back for free, waiving everything, no appraisal gap. I said earlier, deposit money non-refundable, go in with cash but get a mortgage, all those things. Pay seller's transfer tax, the other way around. So that's if you're in a seller's market. Now, the third step of the whole process, you have your mortgage, you found your home, and now there's a due diligence period. Now, in a seller's market, there's less to do than when you're in a buyer's market. But once your offer accepted, I think the real work begins there. Your agent needs to have the due diligence to stick with you throughout this process to make sure you don't miss a timeline. Everything it's very important that you don't miss timelines. Now, I do pre-home inspections on my listings to make buyers comfortable. Since in the seller's market, they have to waive the inspections. However, I was doing it in a buyer's market. I've been doing them for 31 years, and I think I'm the only agent really does that anywhere I know for every listing religiously. In a seller's market, you can have your contractor go through the home before you put the offer in, like I said, but in a buyer's market, you want to go through the inspection. You want to have it, right? Because the standard home buying inspection costs between, right now, in our market, $300 to $600. But why should I do that? Well, it can save you thousands of dollars in unexpected repairs. Because there's a lot that standard inspections don't cover. Because besides inspection, you might need to be a termite inspection or a mold inspection or a radon, it's a separate test, or if you have a well, separate tests, septic, separate inspection, foundation specialist, if you need it. That's another one. Maybe the roof needs to be certified. Usually not. Usually the inspector can look at roofs and say what they think. Or maybe the sewer line needs scoping for some older homes. You never know. And all these inspections, they can cost $100, $200, $500 each. Septic is usually 6 or 7. It's worth every penny. Or if it's stucco, another inspection. Every inspection is worth every penny for peace of mind and negotiating power. So if you get a chance to do an inspection, I know they're doing more of those in Philadelphia, less in the burbs here. If you get a chance to get an inspection, look at structural issues, water damage, mold, electrical system, your plumbing system, the roof, HVAC, all that stuff. Go to the inspection, learn about your house. This is your time to learn about your house. Don't sweat the small cosmetic or minor issues or maintenance items. Save your negotiating capital for the really big stuff, okay? Very important. And after you're done the inspection, there's some negotiating to do, right? You usually have 3 options in most contracts, most states. You can accept the property as is, request repairs or credits, and you can walk away. That's what we have here in PA. And when you're negotiating the repairs, I would focus on safety issues, major systems, things like that. And what you can do is get your contractor in to give quotes to support your repair requests. You can ask for a credit instead of repairs. I'd rather have a credit, be able to do what I want to do with it. Sellers don't do the repairs like they're supposed to be done. But you want to be reasonable. Don't expect a 20-year-old water heater to be replaced if it's still functioning. Just you should be noting that, and I have that here in my list, to be noting when you actually go through the inspection to check the water heater, the age of the water heater. Remember that everything is still negotiable at this point. This is your due diligence time. Oh yes, and if you have an HOA, there's a contingency for HOA, you're going to get the rules and covenants from the seller. You're going to get the list, and make sure you go over that. You have 5 or 7 days to look it over and approve the docs. Make sure you read everything and know about your association, all the assessments and everything else. And next, the other contingency that we have here in Pennsylvania is the property insurance. You have 21 days here to make sure the property is insurable. Make sure you call your insurance company right away and make sure that this property is insurable and get the costs. You have that time to do it. That's another due diligence. And then you have the appraisal. Nobody really explains this part. You get it ordered from your lender, you pay for that. It's one thing you'll pay when you apply for your mortgage. And you have to understand that these appraisers are independent third parties. They're not your bank. It used to be they had their own appraisers coming in, but no, not since the 2008. Appraisers come in from anywhere. Sometimes they don't even know the area. And what they do is they compare your home to similar recently sold properties. Not always the best way. And then they make adjustments for differences in, say, features or size and basement, no basement, things like that. And they're usually very conservative with their valuations. Depends upon how much money you're putting down. The more money you put down, the less they care about. And a lot of times, these appraisers, they make mistakes. They're human, they can make mistakes. So if the appraisal comes in low, you have options. You can negotiate the price down with the seller, you can bring additional cash to close the gap, or you can request a reconsideration of value. If you have better comps, you can do a lot of things. You can also order a second appraiser. Rarely that does happen. Or you just walk away if your contract has an appraisal contingency. You want to make sure you do have that. Now, if you're in a hot market, appraisal gaps are the rule. They're just common. Now, if you have the means, consider giving the seller, having this appraisal gap guaranteed in your offer, which states that you'll bring additional cash to settlement if the appraisal comes in low. Maybe up to a specified amount. So if you put the offer in at $600,000 and the property only appraises for $550,000, you're now putting down $50,000 more to keep that loan to value the same. Okay, next, I know this is a lot, guys, but there's a title review. During this due diligence, you get to review the title. A really, most often, I think, overlooked step, because those title issues can derail the purchase at the last minute. So what the title company does, it researches your ownership history, the liens against the property, easements and encroachments, deed restrictions, and other title issues, such as unpaid property taxes. Maybe there's a mechanics lien from contractors the seller has, or boundary disputes that weren't disclosed, or undisclosed errors, or error in the public records. You always get owner's title insurance. Make sure you always get it. It just protects your ownership for as long as you own the home. Very important. And you'll get a copy of that within a couple of weeks after you submit your title order to the title company, when the offer gets submitted. Okay, you've done all that, and make sure that you're going through the walkthrough of your house. We have a walkthrough checklist. I didn't include that down below, but I have it if you want it. Just let me know. It's called the final walkthrough checklist. It's your last chance to verify the property's condition before closing. And you don't want to rush this step, all right? So make sure that all agreed upon repairs have been completed properly. So take some time when you're in there. If you have a lot of repairs to look at, get an hour before settlement to go in there. We call it celebration day or settlement. Make sure all items included in the sale are present. There's no new damage has occurred since inspection. All systems are functional. Run the water, flush the toilets, test the appliances. Make sure the sellers have completely moved out. I've seen stuff left in the attic. I've seen sellers still there when we go through walkthrough. There's been some crazy stuff going on. And the home needs to be broom swept clean. It doesn't need to be professionally clean. So bring your inspection report with you and your purchase agreement to reference during the walkthrough. Your realtor should be bringing that with them. And if you find issues, don't panic. This is where a good realtor can negotiate solutions before closing, all right? It's a happy time, the pre-home inspection, and a good agent will make sure that the seller has everything cleared out and everything agreed upon before you walk in. They'll be in communication with the seller's agent, making sure everything is the way it needs to be. Okay, it's closing, yay! Closing process. So before you get to settlement and during the closing process, there is a part called mortgage underwriting reality, which I call, and I want to go over that with you because before you get your final loan approval to get through to this closing day, the settlement, the underwriting process is brutal. They're going to verify every single bit of all your financial information. They're going to review the property appraisal, look at the title search. They're going to call your employer, make sure you're making the money they said you're making, income and employment verification. Sometimes the day of closing, the day before closing. Underwriters, they just look for red flags. Don't make any recent large deposit without any explanations. Don't take on any new debt on after getting the pre-approval or during this process. If you change employment, make sure you're in the same type of job. Or your credit score. Make sure your credit score hasn't changed. So what do you do to avoid underwriting issues? You just don't make those large deposits before closings. Okay? You don't apply for new credit. You don't move large sums of money between accounts. What you do is you respond quickly to any documentation request because you know they're going to lose stuff. Okay? Now, with the closing costs, all these costs that are on the settlement sheet, there's a lot of things on there. They typically range from 2 to 5% of your loan amount. They're actually paying for lender fees, like origination fee. Maybe you have that. Maybe you got a discount point. Maybe you decided to buy your rate down. A lot of people do that, especially if you're going to be in your home for a long time. You got your credit report fee, your application fee, your underwriting fee, maybe a rate lock fee, maybe a third-party fee, such as the appraisal. Of course, you have your home inspection, your title and search and insurance. Maybe there's a survey required in your area. I know they have that in New Jersey. I'm also a realtor there. How about attorney's fees? A lot of times they have that as well. Or recording fees. And then of course you're going to have your prepaid items like property taxes. Typically you'll pay 2 to 8 months of taxes ahead of time at closing. You'll need your first year of homeowners insurance to be paid, your mortgage interest from closing date to the first payment date, your HOA fees if you have them. Many lenders have their own names for all these fees, so it's hard to compare, but there's going to be lots of fees. So make sure when you focus on the closing disclosure forms or the loan estimate forms, which they use more a standardized terminology. And they're going to tell you, here's how much money you need to bring to settlement. And they have 3 days before, the minimum 3 days. They can't do it any closer 3 days before. They're going to give you they'll get your closing disclosure. You need to sign it, the exact amount, exactly what you need to bring to closing, or we call it celebration day, okay? If you don't do it, you won't close. So that was a little bit about what happens during the mortgage part. All right, now it's closing day. We call it celebration. You've been through your walkthrough. We talked about that already. And that could take about an hour. 1 hour if the lender and title company are efficient, like ours is. What are you going to do at closing? What's going to happen? We're going to sign lots of documents. Some states use attorneys, others use escrow companies. Here in Pennsylvania, we use title companies, escrow companies. There's less and less documents now because they're getting a little bit more streamlined. You need your valid ID. You'll need proof of funds. You'll need actual certified funds. You can wire them in too. And when you go through closing, the deed and mortgage, they're going to go out to be recorded with the county. You sometimes won't get that back for 6 to 8 months. And all the funds are going to be dispersed to the seller. You get the keys, the agents get paid, and it's happily ever after. But not quite yet, because some surprises on closing day, they can be asking you on closing day last-minute document requests. Some small changes to closing costs. I think big change has to delay settlement. Maybe the funding and the wire transfers take more time. Maybe there'll be some recording delays. You don't know. There's some things that could happen. But we're going through this closing documents. Just pay special attention to the closing disclosure. And you want to compare it to the loan estimate. Make sure it's comparable. And the deed is really important because how you take title matters for legal reasons. If you're not married yet, you don't have tenants in entirety, you have to decide, do you want to, if something happens to one of you, do you want the other person to get everything or that other half to go to their heirs? It's really important to know how you want to hold title. And that's another whole conversation. You're also going to get the note at settlement, the actual loan agreement. You're going to get the mortgage, or we call the deed of trust. It gives the lender claim to your property if you don't pay. You'll get your first payment letter, where to make all your payments. And you want to keep these closing documents forever. Store them in a safe place. A lot of lenders right now and title companies give it to you on a disc. You will need them for taxes and refinancing and eventually selling. So it's good to have. Boy, Diane, this is a lot of information. It is. But we're not done yet because there's post-purchase steps. Really important to know this before you actually buy the house. Immediately, before you even start unpacking, you want to change all the locks and garage door codes. If there's a garage door code, make sure that seller, before settlement, they tell your agent how to change that code or leave some paperwork for it. Understand where your main water shutoff valve and circuit breaker panel are. You should know that if you're doing the home inspection. Replace all your HVAC filters. Make sure your smoke and carbon monoxide detectors are working. I would do a deep clean. I would schedule a deep clean, especially for carpets and bathrooms. You don't know what's in those things. Maybe have even a pest control treatment if it warrants that. Make sure all your utilities and services, of course, are in your name. That's a given before you walk into that house. Because now you're a homeowner, right? And there's some great tax benefits that most people miss out on. They don't understand that homeownership comes with tax advantages, right? Mortgage interest deduction, that's a big one. Property tax deduction, home office deduction maybe, energy efficient credits possibly, mortgage points deduction, capital gains exclusion when you sell, a lot of things. So keep your receipts for all your home improvements. They increase your cost basis and can reduce capital gains taxes when you sell. And I give my clients a home maintenance schedule. I give them a whole list, like monthly, change your HVAC filter, quarterly, gutter cleaning, appliance maintenance, annually, HVAC servicing, chimney inspection, roof inspection, things like that. And seasonally, there's weather-specific maintenance. You want to, if it's in the winter or spring, because maintenance is really important. If you neglect it, it's the most expensive mistake that homeowners make. Set reminders and budget for these tasks. I sometimes call my clients, did you replace your reheater filter yet? And I always prepare my clients with emergency contractors. Every homeowner should have contact info for reliable contractors. Yes, or just call their agent. I have that. Home warranty information if they had it, insurance policy details. Just get the basic tools and supplies for emergencies. Know how to shut off the water, gas, electricity. All those things are so important when you're buying a house. And also, what about building equity? If you you want to build equity faster, just make bi-weekly payments instead of monthly payments. You'll get an extra year, you'll get an extra payment per year that way. Or you can round up your payment, make an extra payment annually, whatever you want to do. You can also refinance to a shorter term when rates drop. Okay, now, what I promised you is my e-guides. I give to all my clients, things that no agent will think about telling you. First, I prepared a list of questions before hiring a buyer's agent. I kind of went over some of the questions. You need to go through this whole process. Ask the questions on the phone, then ask to have a Zoom meeting. Make sure they go over what your needs are, your budget. They show you homes, they understand what your needs are. They have a team in place, someone who shows the home, someone who negotiates, things like that. Next, I think the best of the guide is, I call the Home Buyer's Guide to Avoid Money Pit. Things you must look for when previewing a home. What you must look for when previewing a home. Yeah, you only have sometimes one chance to see a house. You need to look for some red flags. Wall integrity, floor conditions, room dimensions, will think fit, uneven surfaces, squeaky floors, bathroom inspection, kitchen assessment, all kinds of things. It's things you should be looking for when viewing the home. It's so important. And the third guide is the 11 easy steps to finding your dream home stress-free. I go over things and steps that most buyers don't even think about. You know, just how to check your email for homes, how to look at homes online, how to do your homework before viewing properties is so important. This is a job guide. Home hunting, house hunting, it's a new guide. Go to your appointment on time. Have a small notebook or put something in your phone about all the things that you've seen. How to do how to go to open houses. How to read signs and ads, things like that. How to look at realtors' websites. Really important stuff. More and more. The links are all below, so let me know if they were helpful for you. Just comment below if you have anybody you know had a horror story with buying a house. So there you have it, complete guide. I hope it gives you a realistic picture of what to expect throughout the process. Remember, buying a home, it's a financial journey and it's an emotional journey. There are going to be ups and downs, but you're going to be prepared and informed. Just puts you in a best position to make good decisions. And if you really want to know how much you can afford, watch this video. It's an awesome video about affording a home, how much you can afford. It goes over your budget, all the steps of getting pre-approved in detail, things you never think about. Check it out.